A day after the resounding no vote, Greece rallies behind Prime Minister Tsipras. Opposition parties decide to back the government in negotiations ahead of the crucial meet with European leaders tomorrow. European markets and Wall Street wobble. The Lal Street is unperturbed. Bulls come to life in late trade as the Nifty reconquers 8,500. The Sensex surges over 100 points. China joins India in bucking the global trend. The Shanghai index rallies over 2% after the government rolls out emergency measures promising further liquidity to arrest the downfall. The GST bill runs into more trouble as the government starts to lose hope. Congress demands a pure GST with a revenue-neutral rate factored into the bill without the additional 1% tax. Parliamentary panel's land report is likely to be delayed. That's a CNBC TV 18 exclusive. The government clarifies on the new Black Money Act. Persons disclosing unaccounted wealth will be given immunity under Income Tax, Wealth, Customs and FEMA Acts. If a company declares undisclosed assets, its directors will not be made liable.
Our stance has not changed since our last policy statement.
RBI Deputy Governor Urjit Patel says the governor's stance has not changed as far as the interest rates or inflation is concerned. Central government rules out a CBI probe into the Vyapan scam in Madhya Pradesh even as the death toll keeps rising. Congress demands Chief Minister Shivraj Singh Chauhan's resignation. Well, the Greeks have spoken and their voice is loud and clear. It's a resounding no to the conditions that have been imposed by creditors to seal a third tranche of the bailout. Now, the scale of yesterday's no vote has stunned Europe today. Remember, going into the vote, the sense was it was going to be a cliffhanger. It was anything but that. It's also left the top spot in Greece's finance ministry empty after the finance minister resigned earlier in the day. Leaders are now preparing for Tuesday's emergency summit. Greek Prime Minister Tsipras and German Chancellor Angela Merkel had a phone conversation earlier today. They have agreed that Athens will present proposals to the Eurozone summit tomorrow. In fact, Merkel is also due to meet François Hollande in Paris later tonight to discuss the crisis. Now, amidst all of those meetings, the European Central Bank will hold a conference call later today to discuss the emergency liquidity assistance it could provide to Greece, which was capped about 8 days ago. And of course, we've just heard from Greece a joint statement being issued by the government along with the opposition party saying that the opposition parties back Prime Minister Tsipras' proposals that will be made to the Eurogroup. But myriad of reactions coming into that historic vote in Greece. Let's take a look.
We proved that even under the most difficult circumstances, democracy cannot be blackmailed. I am fully aware that the mandate here is not a mandate to break with Europe, but a mandate to strengthen our negotiation position to seek a viable solution.
It's now up to the Greek government to make proposals which could convince the 18 other member states of the Eurozone and the institutions in Brussels that it is necessary, possible and even effective to renegotiate.
The meaning of this referendum was really to send a political signal to the rest of Europe whether Greece is ready to engage with other Eurozone countries and to seek solution for current crisis. And as it was said also by President Juncker last week, that the no vote will dramatically weaken the negotiating stance of the Greek government and will make things more complicated.
Well, reactions coming in through the day. CNBC's Julia Chatterley has been covering the historic referendum. Joins us now from Athens. Jeff Cutmore joins us from Brussels, where the Eurozone leaders have to get back into a huddle to decide on their next course of action. Julia, coming to you first. Let's talk about the finance minister stepping down. This move seems aimed at sealing a deal with the creditors as soon as possible. We've been hearing that his plain-speaking style didn't go down too well with those sitting across the negotiating table.
Well, it's very interesting, isn't it? Not only a huge shock as far as the no victory is concerned in the early hours of this morning, but now, as you say, the added twist of Yanis Varoufakis, the finance minister, resigning. The suggestion in his resignation blog was that the creditors thought it would be easier to reach a deal if he weren't part of the negotiations. But, you know, behind the scenes, I know that he's not really been an integral part of the negotiations over in Brussels for several weeks now. Yes, he turns up to these finance ministers' meetings. He's been accused of lecturing, of making the situation very difficult. And remember, when these talks go on until the early hours of the morning, any kind of personality clash is going to make this more complex, so perhaps it will help. But I think what we need to see now is just who replaces Yanis Varoufakis. Are they going to go for someone who's more moderate, that will promote the kind of deal that's needed here, or are they going to go for a hardliner again? Remember, there's still the red lines as far as this Greek government is concerned on pension cuts, on the debt. Alexis Tsipras mentioned that last night, so even though he was coming out with a more conciliatory tone, he said that this is not a no to the euro. That baseline of debt negotiations still remains a critical factor for this government. So, you know, he's also very much strengthened, I think, by the whole vote and the referendum result that we got last night. The question is just how does he use this? And remember, the line from Brussels all along has been, look, the numbers have to add up. So just because the Greek people don't want to see further austerity and further reforms, it doesn't mean it hasn't got to happen. Guys, I want to show you in that line of what the newspapers are saying this morning. As you can see, a picture of the president of the Eurogroup, Jerome Dijsselbloem, here. No caption. This is a paper that generally supports the Syriza government, showing the shock of Brussels for the support for the no vote here. Also show you another paper, and this one's really interesting. It shows the headline is that the angst of Brussels for the real dilemma here. The headline saying reforms or Grexit. This is what it comes down to. It's a woman saying to her husband, is there any hope? He's looking at the bottom of a ballot box here going, I'm trying to find some. So one of the crucial questions here, does the strong no victory here ultimately mean that the Greek Prime Minister is in a more difficult situation because he's got an overwhelming support now from the Greek people not to go further on austerity? But guys, we all know no further austerity and remaining in the euro doesn't seem to be something that he can achieve. And of course, we know we need a deal in the coming days very quickly because, of course, of the financial sector here and the problems with the capital controls and the impacts on the economy.
Well, not just the people in Greece, he's also got the opposition now on board, Julia. And in fact, a joint statement has come in saying that Greece's main opposition and ruling parties have issued a joint declaration. Let me go across to Jeff Katma. Jeff, what's going on in Brussels now? That emergency summit is, of course, scheduled for tomorrow. Merkel meeting Hollande, and you know, the Greek government saying the immediate priority is to get banks open again. Is the Tsipras gamble going to pay off?
Well, that's a very good question, because clearly, tactically, the Greeks have tried to play through this referendum a strategy that would bring them back to Brussels in a stronger negotiating position. But both publicly and privately, the message that we've been hearing here in Brussels is that actually they're going to find it tougher than it was previously under the last bailout programme. When they come back this time, there will be an expectation, as the German economy minister has said, that they will come with even more reforms, which would suggest more austerity for the Greek people. And our understanding is also that Angela Merkel is taking the trouble of going to Paris tonight before the Leaders' Summit tomorrow to make sure that she and Monsieur Hollande, the French leader, are on the same page on tough negotiations, because in the past the French have been perceived as being a little softer on what their expectations are around the reform programme. So clearly this would look like Angela Merkel going to Paris to stiffen the resolve of the French president before they get into the discussions proper with the Greeks again tomorrow. So The way it's being presented here is that the gamble will not have paid off, and Mr. Tsipras will actually find he has an even frostier reception when he comes with his new proposals if they don't include some significant progress on many areas like privatisation, the rolling back of the pension provision, and things like tax rates for the islands, which have been very much at the heart of disagreement so far on what comes next for the Greek economy. Back to you.
Jeff Cutmore, always a pleasure. Thanks very much for joining us. Has Tsipras boxed himself further into a corner, or will the gamble pay off? That, of course, is the big question. Meanwhile, European equities in the red following the Greek referendum. Let's quickly pull up the frontline indices for you. The German DAX and the French CAC are down over 1%. The British FTSE was down by about 0.5% or so and continues to be at about those levels. The cuts are even sharper in the peripheral markets, with the Italian MIB down by about 2.5% and the Spanish IBEX trading nearly 2% lower. And that's really where the story is headed now, because that's the fear that after Greece, what happens to Italy, what happens to Spain, where elections are due, and are Italy and Spain likely to go the Greece route or not, and then the contagion impact. Of course, those are the questions being asked at this point in time. But it's a volatile day of trade in the bond market as well. The German 10-year bond yield has tumbled to 0.74%. Spanish 10-year yields are up marginally at 2.3%, and Italy at 2.32%. Meanwhile, oil prices are down more than 3% today on the back of Greece's no vote, and China rolling out emergency measures to support the stock markets there, adding to concerns about the demand at a time of global oversupply. So there you see it. The U.S. markets have opened in the red and continue to trade lower, but they've come off a little bit off their day's lows, and they're not looking particularly nervous at this point in time. But crude markets have lost ground and continue to lose ground. But back home, the Lal Street's reaction to Greece was plain and simple. Crisis. What crisis? The markets opened with deep cuts, but the bulls clawed right back as the day wore on, to end with some solid gains. The Nifty zooming past 8,500, bucking the global trend, and that was thanks to a late rally. The Sensex up 300 points off its day's lows, sitting comfortable above 28,000. Mid-caps were even better, with the mid-cap index gaining over 1%. Anuj joins us now to wrap up the day's trading action. Anuj, what a show of resilience here for our market, especially today. No one in the morning would have imagined that we would have closed 300 points higher.
What a day. And you know what, if you ask Indian market participants, point out where Greece is in the map of the world, they'll say, sorry, we don't know. Who cares about Greece? At the end of the day, the market said, we have our own enough ammunition. Let's move on. Let it be a problem of Europe. We got our own issues. We have our own triggers, and we're happy with that. And that is what played out in trade today. Yes, there was a gap down, but really, in hindsight, that was a great buying opportunity. But clearly, for those who would have taken this opportunity, they would be saying that, it's just an easy money that came our way today. Let's talk about the stocks that led the market, because it went to 8,500 and actually closed at that point, at the high point of the day, with big mid-cap outperformance. The stocks that were higher today, pharma stocks did well today. Dr. Reddy's, Cipla, Lupin, all these stocks were higher in trade today. Dr. Reddy's was a top Nifty gainer, up 3.5%. Some other Nifty gainers included stocks like ACC, Bank of Baroda, and TCS. TCS was a big participant in the rally. Now, one big positive out of this Greek situation actually was the fall in Brent crude's price, and that is what the traders latched on to. So stocks like HPCL, BPCL, IOC, all higher by about 3%, pretty close to life highs, all of them. On the losing side, of course, you had some metal stocks like Vedanta, NMDC, and Tech Mahindra, which has been one of the weakest stocks. That was down about 1.5%. But the day really belonged to what you call the high-quality mid-caps. Take a look at some of these stocks. Arvind was up 5.5%, SRF was up 6%, Bata was up 5%. Not just that, you had stocks like Crompton Greaves, that was up close to about 5%. Then, of course, the high beta also participated. Jet Airways was up 11%, and SR Oil was up 17%. I dare say that, the easy work has been done. This morning was actually easy in the sense that the market gave a good buying opportunity. The tough part begins now, which is to take out 8,500 convincingly, and for that you'll need 2 or 3 days of solid gains and maybe even a bit of FII participation.
No one would have thought that today was going to be an easy day, Anuj, but thanks very much. Look where the markets have closed. And similar story playing out in China. Of course, that is because of government intervention there. The Chinese markets have closed higher. But remember, China has been going crazy over the last couple of days. The sessions have been so volatile. And of course, this is probably going to be the largest story to watch out for once Greece is sort of done and dusted and out of the way. today. The China story is going to be the one to watch out for. Shanghai up by about 2.5%. That's where it finally closed for the day, on the back, as I said, of government intervention. Sri Jayagaraja joins us now to take us through what exactly is going on there in the Chinese market. Sri.
Asian markets falling by almost 2 to 3% after a Greek vote to reject austerity measures raised fears Greece could be forced to leave the euro. The Nikkei fell 2.1%, with banks and financial shares sold heavily. The broader topics fell to its lowest level since late May and ended down 1.9%. China's key stock indexes showed signs of stabilization, rising close to 3% in response to unprecedented rescue measures announced over the weekend. During the volatile session, money gushed into blue chips as investors used an opening spike to dump small caps. The Shanghai Composite opened 7.8% higher, but ended the day up only 2.4%. Key indices drew support from financial heavyweights, including China's Big Four state lenders and state insurer China Life. That's your Asia Market Minute.
All right, Sri, appreciate you joining us and taking us through what happened in the Asian markets. Now, as we've been pointing out, the Greek drama had an unexpected twist, one that had financial markets recoiling in shock. But as the day progressed and players got ready for the next act, there are some clear signs that the shock has been digested. Sonia Shenoy tells you what to expect for our markets.
Alexis Tsipras called the Eurozone's bluff. 63% of the Greeks participating in the referendum voted no. A decision that stunned a large part of the global financial markets. But the shock has been short-lived. Many experts say there may be no systemic risk to global equities due to the Greek crisis, and that the Indian market only becomes more attractive with each correction.
Greek situation itself is unlikely to materially affect the world in the short term. India is in a very good spot. The fact that it has not gone up for whatever 7 months itself is good in some sense for new investors and not so bad for the current investors, because they have not seen massive volatility as in the market going up 20% and then falling to come back to a zero level so that they are stuck at higher levels. Everybody has made money because of last year's performance, and this year not losing along the way.
Adding to this confidence is the view that the possibility of Greece exiting the Eurozone is an entirely manageable scenario.
I think India will be very little affected by the global fallout of the Greek crisis. Clearly, if Europe, as a result of this crisis, goes to a slowdown, then ultimately through trade channels, India will be affected.
Dinesh Shah Kotak agrees that India has ring-fenced itself from the fallout of such an event. He says, and I quote, India will likely be impacted primarily from the flight of safety into dollarized assets. In consequence, we may see some volatility in the domestic equity, debt and forex market. Having said that, since the last QE3 tantrum, the RBI has increased its forex reserves to around $355 billion. This provides a strong cushion for any spike in dollar demand. End quote. So don't be surprised if a correction comes knocking at the door. It won't last too long.
The market is not cheap. If you look at Nifty 50 or BSE 30 index, both of them are trading at about 18 times the free float basis for March 16. So clearly valuations are on the higher side. On the local issues in India not being sufficiently supportive, I would say. So in that case, we are looking at a market which is probably going to face some resistance at current levels. You could see 1 to 3% correction quite easily.
The favorite remains in terms of weight by far the Indian market over the next 6 months, so that would take us to the end of the year. No market, both in our Asia strategies as well as on our emerging market strategies, are as overweight right now as India still is for us.
Of course, the curtains have not come down on the Greek drama just yet, so the Greeks may still be a long way from walking out of the Eurozone. The no vote only means negotiations with lenders becomes that much more tricky. And in the meantime, for the Indian markets, there are other triggers waiting in the wings. In Mumbai, Sonia Shenoy.
Well, the market's resilient today and market watchers continue to be optimistic about India. The government echoes those sentiments. Chief Economic Advisor Arvind Subramanian says strong fundamentals will guard India against the crisis in the region. And RBI Deputy Governor Urjit Patel also says that a Grexit, if at all, will only have a limited impact on the world economy.
our macroeconomic situation is much more stable, and we have reserves. And above all, I think we are an economy that is still a very attractive investment destination relative to many other economies. So I think we're relatively well insulated. Now, as for the crisis itself, it's going to be long and prolonged. Tomorrow there's a big meeting of the German and French heads of state.
दुनिया के लिए इतना बड़ा रिस्क नहीं है क्यों ग्रीस काफी छोटी इकोनॉमी है, करीब 1.5% यूरो एरिया की आउटपुट, और दूसरा कि उनकी जो 330 बिलियन यूरो का डेट है उसमें से करीब 75-80% ऑफिशियल क्रेडिटर्स। दैट मीन्स कि ऑलरेडी वो डेट सोशलाइज्ड वन वे और द अदर हो गया है। सो थोड़ा कोई प्रॉब्लम्स in terms of volatility across the world, minor risk of ऐसे कुछ होएगा, पर ये बहुत बड़ा न्यूज़ नहीं था। मेन न्यूज़ 2010 में था कि ग्रीस को बेल आउट पैकेज की ज़रूरत पड़ी।
So India and the world economy largely insulated. That's the view coming in from experts. Let's move away from Greece now to talk about policy news back home. And the going is only going to get tougher for the government as it prepares for a short but crucial monsoon session of Parliament, which begins on the 21st of July. Here's what I'm picking up from my sources, that the parliamentary panel on the goods and services tax will prepare its final report and submit it to the government on the 17th of July. But here's the interesting twist. The Congress members are going to be issuing dissenting notes, and that's because the Congress wants a pure GST and not an impure version of the goods and services tax. The Congress is now demanding that the 1% additional tax that was brought in to get majority states on board, that additional sweetener should be done away with because it has an inflationary and a cascading impact. The Congress is also keen that the revenue neutral rate be brought into the law itself. Now, my sources within the government acknowledge the validity of the Congress's concern, especially as far as the cascading impact of the additional tax is concerned. They perhaps could mull a compromise of some sort, but I'm not really sure whether that can go very far, because remember, this was brought in specifically to try and woo states to come on board as far as the GST is concerned. A clause-by-clause review will happen on the 10th of July by the GST panel. There is a fear now within the government quarters that it looks unlikely, if the Congress continues to be adamant on its position as far as the GST is concerned, that the monsoon session may in fact be missed, which is a big miss, because then that puts into question the rollout of the goods and services tax on the 1st of April 2016. So over the next 10 days, hopefully hectic parleying will take place between the government and the opposition to try and ensure that the GST does in fact go through. The land bill, of course, expected story. No forward movement there. The parliamentary panel set up to look at the land bill is not going to meet its scheduled deadline or timeline either. On to a special report now. Rural Goa is much better off compared to the rest of India, and the government will, of course, has made its clarifications on the Black Money Act. We will, of course, get you that in just a minute, but on to the special report here that we've been telling you about. Rural Goa is much better off compared to the rest of India. 1/4 of Goan villagers pay income tax, the highest for any state, but half of Rajasthan's rural population is illiterate. Those are the highlights from the socio-economic census conducted by the government. Rituparna Bhuyan gets you the fine print.
The national capital of Delhi is the most urbanized in India, where 7 out of every 10 Delhiites live in an urban setting. Mizoram comes in at second place with more than half of its population residing in urban dwellings. Bihar is the other end of the spectrum, where over 90% of the population resides in villages. Assam follows closely with a similar ratio. In fact, in Bihar, 54% of its rural landless population derive their income from manual labor. This is second to that of Tamil Nadu, where close to 56% of landless families have to depend on manual labor. The northeastern state of Mizoram also tops in another category. The state has the highest proportion of its rural population engaged in cultivation. Data shows that 7 out of 10 Mizo villages are engaged in cultivation, and Arunachal ranks second with a score of 67%. Agri-major states like Punjab and Haryana are closer to the national average, with a score close to 30%, while Rajasthan, UP, Gujarat and Chhattisgarh have about 40% of rural population as cultivators. Rural Goa is much better off compared to the rest of India, given the fact that 1/4 of Goan villagers pay income tax, the highest for any state. 7 out of 10 Goan villagers own a fridge, while half of them own a two-wheeler. Meanwhile, in Delhi, about 9 out of 10 villagers own a mobile and 1 out of 10 own a car. When it comes to education, Rajasthan has a very poor report card as half of its rural population is illiterate. Bihar may be contributing heavily to IIT and civil services rank holders, but ranks second in terms of illiteracy with a score of 44%. But perhaps the most interesting revelation of the SECC data is regarding houseless families. Rural Arunachal Pradesh has only 5 houseless families, while in its limited urban areas, census enumerators found only 1 houseless family. In New Delhi, with Rutuparna Bhuyan, this is Shireen Bhan.
Well, that's the grim reality there. But let's get back now to Ashish Merishi, who's tracking that story of the Enforcement Directorate issuing a notice under the PMLA to Lalit Modi. Ashish, what more do you have for us?
Well, Shirin, this is not a notice. It is, in fact, summons that have been issued under the Prevention of Money Laundering Act. And Lalit Modi has been asked to appear before the Enforcement Directorate and join probe within 3 weeks of time. Now, as far as the case goes, there are 2 cases of Prevention of Money Laundering Act which have been, which are under investigation, and in which Lalit Modi is an accused. But this notice has been issued in the MSM and WSG deal, where there are allegations on Lalit Modi that he took a kickback of around 125 crores in the entire deal. And certainly, this is bad news for Lalit Modi, because earlier all investigations were happening under the Civil Act, that is FEMA, that is Foreign Exchange Management Act. But now, since it's a criminal act and the Prevention of Money Laundering Act, so all action will be taken under CRPC. So certainly, this is going to be a big action against Lalit Modi, and within 3 weeks' time, if he doesn't appear, then there is a likely chance that even a red corner notice can be issued against him.
All right, so 3 weeks to Lalit Modi. The summons have now been issued by the Enforcement Directorate. The government is hardening its position on this matter. But news just coming in. Euclid Tsakalotos is being appointed as Greece's new finance minister. This was, of course, being rumored. It is now official. This is the information coming in from the government in Greece. Euclid Tsakalotos is being appointed as Greece's new finance minister. Remember, the finance minister resigned earlier this morning, and in his blog, he seemed to suggest that creditors weren't particularly happy dealing with him. What people were telling us, of course, and reports were suggesting, is that his lecturing style didn't go down too well at the negotiating table. So now a new finance minister in place, and this is going to be crucial ahead of the negotiations that will take place tomorrow. Well, that is the grim reality. And, of course, Greece now has a new finance minister, and negotiations will be underway tomorrow. Of course, keep tracking the story right here on CNBC TV 18 as we keep an eye on the markets back home and, of course, bring you all the latest developments from Greece.